What is up, people? Miles here with Keep the Change, and today we are doing a $14,000 Robinhood portfolio reveal. Now, to preface this, I've been working on this portfolio for about 3 to 4 years now, and I've just been funneling money in pretty much every month ever since 2016, 2017, I would say. If you're only here to see my 3 biggest stocks and whether or not I'm up or down on the account, then just go click to this timestamp and you should be able to see it. But remember to like and subscribe or else you're going to be stuck in traffic and you're not going to enjoy it, okay? Nobody likes that. We're not going to do a full analysis on every company here, more a brief description of what they do and why I have them in my portfolio personally. Let's get right into it. All right, so starting off, let's just go smallest to biggest. So first off, we have my very first stock here in terms of amount, the smallest one, HMNY. And actually, it's my worst investment ever. I basically have $1 in it. It literally means nothing to me. But I thought I'd just mention it as a funny thing, I guess. So the stock is down 99%, which is pretty awesome. Basically, what this was is 2 or 3 years ago, there was a company called MoviePass. And basically what they did, you would pay for a MoviePass and it would let you see unlimited movies every month. You would pay like 20 bucks or something. Great for consumers. Terrible, terrible business. The stock speaks for itself. It's down 93% today. Amazing. So yeah, I'm down $1. Worst investment ever by far, but it's only $1. I put some money back in 2018. I said f it, and obviously that did not go well. But let's move on to a real stock here. All right, we got Revolve Group, and Revolve Group I have 15 shares in, an average cost of $15.68, market value of $324. My portfolio diversity, it makes up around 2%. I am currently up $80 on this stock, 32%. Revolve Group is basically an online store for women mainly, and it appeals to women. And the reason that I love them so much, I actually saw this on Financial Education from Jeremy, so shout out to him. But the reason I love this stock so much is it's a high growth stock, and it still trades at reasonable valuations. I think it's got a forward PE of around 30, but that's really good in a market like this. On top of that, they're really good with marketing. They actually use influencers such as YouTubers or Instagrammers to actually market their product. They understand that advertising, the future is social media. I really like that about this company. I think it's got great growth ahead of it. It's an apparel company, so it gives my portfolio some diversity that it may not have. It's a 2% position. I would get this up to like a 5% position in my portfolio. I do want to buy some more shares. I'll probably buy some more next week. All right, next stock on the list, we got Lockheed Martin, and I own 1.6 shares, an average cost of $373, a market value of $619, and I'm up around $19 or 3%. I bought this stock, I think this year, and basically my thinking behind this stock is that I really like the dividend. It's around a 3% yield, so meaning if you put $100 in, you'll get $3 at the end of the year, basically. And what Lockheed Martin actually does is they're a defense play, so what does that mean? Well, they sell aircrafts and military personnel to the government, and 71% of the revenue comes from the US government. So to me, that's a really good play, because if there's one thing the US likes, it's spending money, especially on military stuff. It's kind of a different play because this is a value play. The PE is around like 16 or 17, which in this market is really fair. I needed a dividend stock that would pay me consistently every quarter. And in general, this is just kind of a safer part of my portfolio. Most of my portfolio is in tech stocks, so this kind of just balances that out. It gives me a little more safety. This is around 4% of my portfolio. I do want to get that to like $1,000 position, so maybe like 6 or 7% of my portfolio. All right, the next stock here, Take-Two Interactive. Take-Two is a video game maker. They make a lot of video games that you probably know, such as Red Dead or GTA or BioShock. Currently, I have 4 shares, an average cost of $107. It's a market value of $658. Portfolio diversity, it's around 4% of my portfolio. Currently, we're up on those shares, up 50% or $220. Now, for me, Take-Two right now, the valuation's a little too rich. I think if it dropped down more, I would actually buy some. I'm gonna make a whole video on that, so make sure to stay tuned for that. But I'm happy with the position it is in my portfolio. But if it dips heavy, don't worry, because I would buy a lot of it because it has literally no long-term debt, which I really love that about a company. It's got great growth prospects, which is also really needed because I'm kind of a growth investor first. All right, next stock on the list, we got GAN, ticker symbol GAN. I got 46 shares, an average cost of $21. market value of $867, and portfolio diversity of 5%. So this makes around 5% of my portfolio. I'm currently down $100 or 10% on these shares. Now, what does GAN actually do? I made an entire video on this. If you want to go check it out, go ahead and do it. But if you want the brief version, basically GAN makes technology for casinos, and they allow casino apps to run online and do online gambling, which is going to be legalized further in the future. It's already legal in a lot of states, but in some states it isn't. So as the market opens up, they're going to grow their revenues immensely. They grew revenues around 100% this quarter. They're an extreme growth company that's actually profitable. So that's something that I really like. Huge potential in my opinion. So I actually do want to buy more. I'll probably get it to around a $1,000 position as well. That's where I'd feel comfortable. I am down 10% on the shares, but I'm not too worried. The stock is extremely volatile, meaning that it's got its big up days and its big down days. It's what I expect, you know. I think in 5 years, this will be easy money in my opinion. All right, next stock, we got Activision Blizzard. Activision is a video game publisher, and it's most well known for Call of Duty. They own a lot of other brands too. They own Candy Crush, they own World of Warcraft, Overwatch, a ton of good stuff. I bought this stock around September, back when it got hit really hard. Got 14 shares of it, an average cost of $54.74. Market value of around $1,000, and portfolio diversity is 7-Eleven, so Slurpees, I guess, shout out to them. I'm currently up 43% and up $335. Now with Activision, I think you're getting a really good company with decent growth prospects. I mainly bought it. It was so undervalued at the time that it was really just ridiculous in my eyes. So I just had to scoop up some shares personally. I am contemplating selling it, but I don't think I won't anytime soon. In terms of buying more, I don't think I'm going to buy any more anytime soon. I think if it hit like the $70 range, I would probably add to my position. Another nice thing about Activision is the fact that they pay a dividend. So every quarter, I get some dividend money from them, which is pretty nice as well. All right, next stock up, we got Facebook. Everybody knows Facebook. Everyone uses it. If you don't use Facebook, you use Instagram or WhatsApp. Future of advertising. It's all on Facebook. Amazing balance sheet. Shares, I've got 6.3 shares, an average cost of $183. Market value, $1,739. Portfolio diversity, 11%. So 11% of my portfolio. And I am up 50% and $583 on that. So would I add to Facebook at these levels? I actually might. I do want this to be a bigger portion of my portfolio. I would be really comfortable with it being one of my top stocks, to be honest. I want it around 13 to 15% of my portfolio. All right, next stock on the list, we got Alibaba. And if you don't know what Alibaba is, it would make sense why you don't. It's basically the Amazon of China. That's what people term it. But basically what it does is e-commerce. So you buy something off Alibaba in China, and yeah, it comes straight to your door. It's pretty much the dominant marketplace for e-commerce in China. It also has a cloud computing business that is growing rapidly as well. I think it makes up around 11% of the revenue around there. Now, personally, Alibaba to me is one of the most undervalued stocks in the market right now, only because they're growing revenues last quarter at around 34%, and they have a forward P of around 30. That is ridiculous. That's a really good deal in my opinion, just because Amazon is being valued at like 100 times earnings when they have the same growth. However, Alibaba is really just discounted because it's a Chinese company. It makes sense. A lot of people don't really trust the Chinese in terms of financials, whatever. But I think it's extremely undervalued. In terms of shares, I've got 6.75 shares, an average cost of $176, market value of $1,861, and a portfolio diversity of about 12%. I am up 56% or $671 on that. Now, would I be adding to my position? Probably. I actually do want to buy some of this really soon. If it hit 250, I would buy it in a snap of a finger like that. I think this is one of the most undervalued stocks in the market right now in terms of risk reward for your money. Next on the list, we have my worst stock in the portfolio by far, Momo. Let's just rip the band-aid off right now. I have 132 shares, average cost of $25, and a market value of around $2,000. Portfolio diversity of around 13%. And the total return is negative 37% or minus $1,236. So this is by far and away my worst stock in the portfolio. Now what Momo does is they have a live streaming app that around 100 million people use every month. Basically like a social media app. And then they also have the Tinder of China, which is called Tantan. And they're a Chinese company. So a lot of people do not trust this company for a multitude multitude of reasons, but I do trust the company. I think the financials are legit. But this stock has been massively hit after the pandemic, mainly due to their social apps being very reliant on sort of in-person meetups almost. Like it's basically better for them if people can meet up on their apps. However, this is trading at such a dirt cheap valuation. It's almost a joke because the forward PE is around an 8 on this company. It's got $2 billion in cash, $2 billion US, mind you. I do want to add shares, but I don't want it to be, a cornerstone of my portfolio. I don't want it to be in my top 3 stocks. It was for a while, and I thought it was going to come back. However, I was not right. This stock is either going to hit 0 or it's going to hit 50 in the next 5 years. And realistically, I think it's got a way bigger chance of hitting 50. Now, my top 3 holdings. This is exciting. We got Visa. I have 10 shares in, average cost of $154, a market value of $2,000, and the portfolio diversity of around 13%. I am up 32% on my shares, or around $500, so not too shabby. What can you say about Visa? I think everybody spends money, and basically whenever you spend money, they make a tiny fraction of what you spend. Now, Visa's revenue was extremely hurt by the pandemic. Obviously, people going out less means they're going to be spending less, and a lot of sales actually that come from Visa is like when you're on your way to work, stopping at the gas station, you might just get a soda, you might just get a candy bar, whatever the case, small little minuscule stuff like that, which really helps them out. But in the end, in 5 or 10 years, is Visa going to be higher? Yes, I can say that with 100% certainty. This is a great company, probably a little overvalued at this point, I'm not gonna lie. I think if it dropped to 190, 180, I would probably start putting money back in. But at the same time, this is a stock that rarely dips. I mean, it barely goes down ever. So to sell it would just be kind of ludicrous in my opinion. Visa also pays me a dividend, which is extremely nice. So every quarter I'll get some money from Visa. Not a ton, but enough to where I'm happy with it, and I just reinvested back into the stock. All right, next up, we got the big boy, Amazon. Jeff Bezos, shout out to you. Shares, I have 0.64 share. I don't even have a full share. 0.64 shares. Market value, it's all messed up, so don't pay attention to that. Average cost of around $1,824, and I'm currently up 75% or $886 on these shares. Now, I do want to get a full share of Amazon. Hopefully that'll happen soon. Hopefully I put enough money in, but I do think it's extremely overvalued at this rate. However, Amazon's a stock where I can never justify selling it. It's just that amazing of a company. Retail is dead, and I think everybody knows this deep down, which is why Amazon, trades at such a steep premium. There's such a Goliath. I mean, it's almost hard to compete with. If it went to like 3,000, I would probably buy some more. But right now, I'm just holding. The biggest stock in my portfolio by far is Microsoft stock. I have 10.37 shares, average cost of $115, market value of $2,167. It makes up around 14% of my portfolio, which I'm very happy with. It's a very stable company. I'm up 80% on my shares, or $962. Obviously, there's a ton I could say about Microsoft. First off, Azure, their cloud business. It's growing at immense rates. They've owned Xbox, they own Windows, they have Office 365, LinkedIn, GitHub. I mean, the list is endless for what these guys own and what they can do. And Satya Nadella, one of the best CEOs ever, in my opinion. He totally turned the entire company around. I really like the fact that a lot of Microsoft's revenue is recurring too. You buy Office 365, it's a subscription-based thing. They also have their toes dipped in gaming with Xbox. I mean, I love that as well. I'm an Xbox user myself. And then on top of that, this company has a dividend, which I really enjoy. Obviously, I'm gonna like a dividend every quarter, so I make around $5 every quarter, so $20 a year, nothing crazy, but I reinvest it back in the company and hopefully make more. Now, to talk about what you all want to talk about, I'm sure, how much I've made, and this is gonna be very disappointing. I'm just gonna preface that. So today, $14,000 in the portfolio, exactly almost. We're down quite a lot. We're down like $600, pretty sad. For the week, we're down $1,500, so almost 10%. This was a really bad week. I should have filmed this last week. It would have looked way better. We're still here. We gotta be honest. We gotta be transparent. Now, in the last month, I'm down 4%, around $675. In the past 3 months, I am up 0.24%, or up $34, barely anything, not even notable. In the past year, I am up $1,000, or 9%. And all time, I am only up 2%. let's explain this all-time graph here just to get it out of the way. So basically in 2018, I was doing extremely good for myself and I made a couple bad decisions. I talked about this in a video before, in my very first video actually, if you want to go watch it, top 5 mistakes I made in the stock market. But I talked about how I went all in on this one stock called Micron stock. Not only did I go all in on this stock, but I went all in on options. Now, we're not going to get into what options are, but basically what you need to know is options is a way you can make money really fast and lose money really fast in stocks. I had these options and they all expired, meaning I lost literally 100% of my investment. So from 2018 to December 2018, I lost around $6,000. Now, really, it was like $3,000, but with the portfolio adjusted to what it is, it says 6,000. But I lost a lot of money. So I pretty much swore off investing from that point. But I got my act together. I said, you know what? I'm going to do this right. And so I actually invested in companies that I believed in and I thought were actually going to do good. I started off with Visa, Microsoft, Take-Two, and I slowly built the portfolio that you see before you today. I count it as going from my very bottom to where I'm at now, and I'm up 40% from that, so I'm very happy with that. You gotta take the wins when you can. Obviously, if you take into account the fact that, I didn't know what I was doing, and now I do, I'm doing a lot better, guys. So that's all that can be said. Hopefully I beat the market soon enough. Thanks for watching. There wasn't too much education in this. More just you knowing what stocks I'm in, why I'm buying them, why I like them. Thanks for watching. Don't forget to subscribe and like, or I will find you, and I will do something bad.